You land your first serious customer contract. Before you can start, the customer asks for proof of commercial insurance. The certificate matters, but there is a more basic question first. What is the insurance actually supposed to protect against? Goal: understand what can trigger a business insurance claim, what protection may look like, and why customers often ask to see proof before they let work begin. Commercial insurance starts with real-world events. Someone could be injured. Someone else's property could be damaged. Your own building, stock, tools, or equipment could be lost or damaged. The point is not that every event is covered. The point is that businesses face events that can create serious financial loss. A claim is not always a neat, proven event. Sometimes it starts as an allegation, a demand letter, or a lawsuit. That matters because part of the value of insurance can be the response process, including defense, investigation, settlement, or payment where the policy applies. Insurance does not make business risk disappear. A better way to think about it is risk transfer. For certain covered events, subject to policy wording, the insurer may take on some of the financial consequences that would otherwise land directly on the business. Protection can look different depending on the policy. It may involve defense for certain allegations, payment of covered damages or settlements, repair or replacement of insured property, or lost income after covered property damage. The actual answer depends on the policy wording, endorsements, exclusions, conditions, and facts. This is the trap. Having insurance does not mean everything is covered. A policy is a contract. It has terms, limits, exclusions, deductibles, conditions, and sometimes endorsements that change the wording. So why does the customer ask for proof? Because your work may create risk for them. If you are working on their site, handling their property, advising their business, or interacting with their customers, they want evidence that your business has insurance in place. Different businesses have different exposures. A contractor, a consultant, and a retailer may all need commercial insurance, but not for exactly the same reasons. That is why the first broker conversation should be about what the business actually does, where it operates, who it works for, and what contracts require. A useful insurance conversation starts with context. Tell your broker what your business does, where you work, who your customers are, what contracts require, what property or vehicles are involved, whether you handle data, and whether there are any unusual exposures. Now the certificate request makes more sense. The certificate is not the starting point. It is evidence that comes after the insurance conversation. The customer asks for it because they want proof that certain insurance exists before work begins. Short recap. Commercial insurance helps transfer some financial risk. A claim may start with an event, allegation, or demand, and a certificate of insurance is proof after the policy conversation, not the policy itself.